Did you know that while the U.S. is pushing hard to impose tariffs to protect its economy, its closest allies are gradually reducing their dependency on America? That's right. Canada, America's nearest neighbor, is making bold moves to cut back on its reliance on the U.S. and expand its global partnerships. Could this signal a major shift in the global economy? Canada is leading a trade revolution, but what will the U.S. lose in the process? Let's take a closer look. Recently, Canada's Minister of Trade, Mary Ng, traveled to Europe to strengthen trade ties with the European Union. During her trip, she held crucial meetings with EU officials to deepen the trade relationship between Canada and the EU. As trade tensions between the U.S. and its allies continue to escalate, this isn't just about Canada seeking new trade partners. It's a strategic effort to reduce its dependence on the U.S. Thanks to the Comprehensive Economic and Trade Agreement, CETA, trade between Canada and the EU has soared, reaching a record high of $100 billion in 2021. This demonstrates Canada's significant progress in building independent and sustainable trade relationships. But Canada's strategy doesn't end with the EU. It's part of a broader plan to diversify its global trade network and secure its economic future. Canada is adopting a bolder strategy by shifting its energy exports to Asia. For decades, nearly 97% of Canada's oil was exported to the U.S. However, with new strategic agreements signed with Japan and China, Canada is reshaping this dynamic. This move not only reduces risks from U.S. tariff policies, but also strengthens Canada's role as a reliable energy supplier in the global market. The bigger question, though, is whether America is losing its dominant position in global trade. The U.S.'s protectionist policies, including tariffs on trade partners, are pushing allied nations to seek new relationships. This shift is forcing the U.S. to confront a significant change in the global supply chain as allies increasingly diversify their trade dependencies. Can the U.S. maintain its leadership in global trade, or will it face economic isolation? As allied nations forge new partnerships, the U.S. risks losing its edge in the trade game. What does this mean for the U.S. economy? The answer could determine whether America remains a global trade leader or becomes increasingly isolated in an evolving economic landscape. The U.S. is increasingly at risk of economic isolation in the global market. Countries like Canada, the EU, and various Asian nations are not only reducing their reliance on the U.S., but also strengthening their independent trade relationships. The tariffs imposed by the U.S. are having an unintended consequence, shrinking market share for American businesses in international markets while pushing other countries to collaborate more closely. As a result, the U.S. is gradually losing the economic influence it once held. Canada, for instance, is not just diversifying its export markets, it's also focusing on sustainable development strategies. Through mining projects that support the green industry, Canada is building a sustainable and ethical growth strategy, creating significant opportunities in future industries like renewable energy and green technology. Canada is moving forward with confidence in its diversification and sustainability efforts, while the U.S. could face major challenges if it continues down its protectionist path. Meanwhile, the U.S. auto industry is facing a crisis. Electric car prices are skyrocketing, Tesla factories are at a standstill, and the industry is on the brink of collapse, all reportedly due to a tariff decision from Canada. Can America hold its ground? Or is this the beginning of the end for its dominance in the electric vehicle and tech industry? Let's dive into this issue in today's video. Canada's counterattack, striking at America's economic weak spot. Let's take a closer look at Canada's bold decision to target key strategic U.S. goods, including Kentucky bourbon, Florida orange juice, and even the electric vehicle industry. These products aren't just economically significant. They hold deep cultural and symbolic value in American society. The big question is, will these targeted strikes shake the U.S. economy to its core? Can America withstand the pressure when its most iconic products face heavy tariffs from Canada? Canada's retaliation isn't just a simple tit-for-tat move. Instead, it's a calculated strategy aimed at products with far-reaching economic and social impacts. Each item taxed has the potential to trigger a domino effect, driving up consumer costs and directly hitting regions with strong cultural and political influence in the U.S. But the impact doesn't stop at everyday consumer goods. One of the hardest-hit sectors is the electric vehicle industry, with Tesla, a symbol of American innovation, now facing significant risks. Tesla isn't just an electric car manufacturer. It represents the cutting edge of U.S. technology and ambition. Yet this iconic industry is now under serious threat. As the world shifts toward electric vehicles, Canada's counterattack raises critical questions. Can America maintain its leadership in this crucial sector? Or will this move mark the beginning of a decline in its dominance? The stakes are high, and the ripple effects could reshape the global economic landscape. Tesla and other electric vehicle manufacturers depend heavily on imports from Canada, such as nickel, lithium, and aluminum, materials essential for producing electric vehicle batteries. Canada's tariffs on these critical resources could lead to significant disruptions, driving up production costs and pushing electric car prices even higher. As a result, not only Tesla but the entire U.S. electric vehicle industry is now confronting unprecedented challenges. Investors are in a state of panic, with Tesla and electric vehicle stocks experiencing wild fluctuations, sending shockwaves through the broader stock market. Unsurprisingly, consumers will feel the impact first, as electric car prices soar. But the issue goes even deeper. The electric vehicle industry is in the midst of a major transformation, and car manufacturers, not just in the U.S. but globally, are grappling with a supply chain that was already under strain. The shortage of these vital materials doesn't just increase production costs. It also triggers widespread price hikes, affecting manufacturers and consumers worldwide. This situation underscores the fragility of the global supply chain and highlights the far-reaching consequences of Canada's strategic tariffs. So, what's happening as Canada takes a strong stance against the U.S., and how is this impacting the global economy? This story goes far beyond the U.S.-Canada border. The ongoing trade war is forcing countries worldwide to rethink their strategies. As the U.S. struggles to manage its strained relationship with Canada, other nations, particularly China and European countries, are stepping up to strengthen their trade ties with Canada. They're no longer sitting on the sidelines. Instead, they're actively seeking to fill the gaps left by the U.S. For developing nations, this presents a golden opportunity to enhance cooperation with Canada, especially as the U.S. grapples with this crisis. But the bigger question is, can the U.S. maintain its position in the global market as trust from its allies begins to erode? With other nations shifting their focus, is America's dominance in international trade at risk? We want to hear from you. What do you think about the trade war between the U.S. and Canada? Share your thoughts in the comments below. Thanks for watching, and we'll see you next time.